Welcome to the C-Suite at the Open. I'm Brooke Simon, head of company services based in Calgary. This month, we continue to highlight select new companies that listed on our exchanges in 2021. Joining us today is Nicholas Sosiak, CFO of Cannara Biotech, a Quebec-based premium cannabis licensed producer listed on the TSX Venture under the symbol LOVE. Nicholas, great to have you here today.
Thank you, Bert.
So tell us who Cannara is.
Yeah, my pleasure. Cannara is a Quebec-based licensed producer. We went public in early 2019. We received our cannabis cultivation license in 2020, and finally our sales license in January 2021, where we began to sell our products to the retail market in Quebec. As you said, Bert, Cannara is trading under the ticker LOVE on the TSXV. We have two mega facilities. One is a 625,000 square foot indoor facility located in Farnham, Quebec. And our other facility, recently acquired from the Green Organic Dutchman for $27 million, is a state-of-the-art, purpose-built hybrid cannabis facility located in Valleyfield, Quebec, that measures just over 1 million square feet. Cannara is a bit differentiated as we entered the market in the second wave of licensed producers after the first batch of licensed producers entered the market with their products. This allowed us to identify gaps in the market. After our analysis, our takeaway was that established players were offering entry-level quality at elevated prices, which is a common in a nascent industry. However, what we noticed in this industry is that the consumer values quality. So that's what we started Cannara with, one purpose in mind: to provide the highest quality cannabis at entry-level pricing and to lead the industry by example. We're determined, we believe we'll succeed, and we see a bright future ahead of us. And with our two facilities being located in Quebec, we believe that this will allow us to achieve our strategy of delivering premium grade cannabis at competitive pricing.
So regarding Quebec, Quebec is a competitive province for cannabis cultivation, and partly due to the size of the market opportunity and also its low cost to operate. Can you speak to these advantages?
Absolutely. Being in Quebec allows us to unlock significant cost advantages from the two main input costs of producing cannabis, being electricity and labor. Quebec has the lowest electricity in Canada at an average of 5.2 cents per kilowatt. And as a side note, our Valleyfield facility, being zoned agricultural and having a dedicated 50 megawatt powerhouse on site, has access to even lower rates at 3.6 cents per kilowatt. Secondly, labor costs in Quebec are the lowest amongst the top metropolitan areas in Canada. And combining these two cost inputs allows us to achieve these cost synergies and ability to achieve our other part of our strategy of delivering high quality cannabis at competitive pricing. Secondly is competition. There's 97 brands in Quebec versus 218 in Ontario. In terms of producers, there's only 26 producers in Quebec versus 105 in Ontario. And store count, we're only at 68 stores in Quebec versus 700 in Ontario. This creates a good opportunity, a market opportunity for a licensed producer like Cannara to enter a market at a prime time and deliver quality products that can capture a significant market share and then expand across the country. Thirdly is the growing market size in Quebec. The market in Quebec is showing signs of accelerated growth. In fiscal 2021, SQDC reported over $537 million of revenue, up from the $311.6 million of revenue in fiscal 2020 and $240 million in 2019. The retail footprint has expanded from 28 stores in fiscal year 2020 to 72 stores currently. And as of to date, they're planning to be close to 90 to 110 stores by the end of 2022. So we see Quebec as a real opportunity to grab a significant market share of the cannabis market.
Nicholas, when you're talking about Cannara in the first question there, you talked about so much you accomplished in very little time. So 2021 has been a really busy year for you. Can you maybe highlight a few of those accomplishments and maybe talk to what investors can look forward to?
Sure. To begin with, we're proud of what our team accomplished. I'd say our biggest achievement is that we delivered on all our promises and all our milestones. We promised to build out a facility capable of delivering some of the highest quality flower, and we've dialed in all of the parameters to achieve a product that can stand tall against some of the best products in the legal system and the legacy market. We set a plan to build a lean operation, and today we operate with excellence, which allows us to secure margins and maintain disruptively low retail prices for our consumers. We built forecasts that were somewhat aggressive, and we hit those numbers way ahead of our schedule. We promised the market we'd expand our production capabilities and just delivered on that through our acquisition of the Valleyfield facility from the Green Organic Dutchman. We promised to deliver shareholder value. Our Q3 results are showing that we're EBITDA positive and net income positive in our initial 3 months of operation. As for what investors can look forward to, we plan to increase the scope of our product mix to include new strains, new formats, and new product categories. We want to introduce 2 SKUs at the tail end of Q2. We did launch 2 SKUs at the tail end of Q2, launched another 10 SKUs in Q3, our first complete quarter in the retail market in Quebec. And we released another 6 SKUs in the current quarter, and we have more innovation to come. Demand for our products is still higher than what we're currently supplying. Our plan is to increase our supply in our home market of Quebec, and we'll begin to introduce our products in new territories across Canada, leveraging our Valleyfield facility.
Nicholas, you recently released the Q3 results, which you touched on. Can you speak to some of the highlights of those results?
Absolutely. We thrive for operational excellence. We built a model that was lean, centered around smart operational principles, automation, and elevated output. And from there, we optimize further. We constantly push ourselves to increase plant yields. We run multiple shifts to maximize the use of our CapEx, and we only sell the best product that we cultivate to our consumers. And this is what got reflected into our Q3 2021 financials that were released today on July 28th. We've achieved revenues of over $7 million. We've achieved gross profit of over $4 million and a bottom line net income of $1.7 million for the 3 months of our first 3 months of being in the retail market.
Nicholas, thank you so much for your time today. We're really looking forward to seeing Cannara's continued growth.
Thank you, Burke. It's been a pleasure, and I encourage everyone to download our latest financial statements and MD&A for a closer look to what we're building.